Good morning, everyone, and welcome to the European crossover webinar. And we are getting some Dalian coming in with the market manufacturing PMI for the Eurozone. It came in at 46.9. Reuters poll was for 46.6. So pretty much in line where they were this last time. We did have the cakes and manufacturing PMI out of China came in last night. That came in a little bit stronger at 51.8. Reuters poll was for 51.4. Previous month was 51.7. That was got its risk on here this morning. Got new highs again, all-time highs in S&Ps. And with that, we had moving into Europe. We had Spanish PMIs come in at 47.5, so an improvement over not only last month's, but the Reuters poll, as well as Italian came in just a bit better than the poll, which was 47.6. That was the actual number. And then French PMI came in at 51.7, nice move there also, along with German PMI, which came in at 44.1. That was better than last month's, which was 43.8. So with the exception of Italy, which just came in just a hair bit weaker, just 1/10 weaker, all the PMIs, outperformed, especially the China PMI, which there was some focus on for risk on, and obviously we got it. We saw that. We're also seeing with that risk on, we're seeing the Dalian, on its highs at this point. Euro continues to remain weaker. After that move we actually dipped on Friday. Looked like we might end up, pushing lower. We rebounded nicely, but we've kind of just sat there and just not done a whole bunch of anything. We're just trading rather quietly here. Moment. And cable continues to remain above 129 now. We're not too far away from that pivot, which is 29.80, but in the sense of the overall picture, I mean, we're at 29.13, a ways from there if you look at it with a quick microscope, so to speak. But we're still holding up above 129, so that's going to be the key level, which has been for a long time, that 29.80 pivot. Cash dollar index is holding firmly above 98 at 98.33. We did make a quick jump overnight or in the last 2-hour bar, but we have not been able to get above that 98.65. That would put the bulls in full control if we get a daily close above 98.65. Have seen the Aussie move up a little bit higher. And dollar CAD is just simply marking time at this juncture. So let's say, take a look where we stand right now. Looking into the calendar, coming into the States, we will have a manufacturing PMI final number. That'll come in at 8:45 Central Standard Time, which is 9:45 Eastern. Last month's was 52.2. And then we do have ISM manufacturing PMI. That comes in at 10 a.m. Eastern. That'll be a bit of a mover, along with prices paid coming in at 10 a.m. Eastern, ISM new orders. And we do have Mexican manufacturing PMI at 10:30 a.m. Eastern. Let's see. We do have a RBA cash decision that'll be later on this evening or next day, depending on what neck of the woods you're in. But that would be either Monday evening / early Tuesday morning. That decision will be at 10:30 Eastern time. And then as we roll into tomorrow, we will have Eurozone producer prices at 5 a.m. Eastern. So let's go and take a look and see where we stand here. Bear with me. So it says the safe haven yen hits a 6-month low After upbeat Chinese factory activity, the Japanese yen hit a 6-month low on Monday as investors cheered an unexpected rebound in Chinese manufacturing while a tightening British election race knocked the pound. The safe haven yen fell 0.2 to 9.72 per dollar, its lowest since May, and riskier currencies rallied after two surveys showed Chinese factory activity expanding. Sterling was down 0.25 point at 29.13 as a clutch of polls pointed to a sharply narrowing lead for the Conservative Party ahead of the December 12th election. Gains were led by the Kiwi, which put on a 0.6% gain against the yen to its largest since August. The New Zealand yen rose 0.3 on the greenback New Zealand dollar to buy 64.44, its strongest in a month. S&P futures are up. There's a risk-on mood, said Jason Wong, senior market strategist at BNZ Wellington. China's factory activity expanded the quickest pace in almost 3 years in November. A private business survey showed on Monday, following upbeat official data over the weekend. The Cakeson survey also showed total new orders and factory production at buoyant levels. Wow. Even a report from the new website Axios, citing a source close to the U.S. negotiating team, saying that tensions in Hong Kong had stalled Sino-U.S. trade talks was not enough to dent the sentiment. The market is taking it with a degree of salt, waiting for clarity, said Rodrigo Cottrell. We keep getting on these unofficial statements. No one is going to be taking a major position until we get more clarity on the trade front. China warned the U.S. last week it would take firm countermeasures in response to U.S. legislation backing anti-government protesters in Hong Kong, but has yet to offer any details. The trade-sensitive Aussie dollar headed for its biggest percentage gain in 2 weeks, adding 0.2 to 67.74. The greenback held steady against the euro at 10.17 against a basket of currencies. The cash dollar index was at 98.31, which is pretty much where we're at now. The possibility of further monetary easing in China and the lack of firm news on trade kept the yuan on an even keel at 7.03. The next focus will be on the manufacturing surveys in Europe and U.S. later today. We just covered those manufacturing PMIs, and they came up rather positive on the up end, with the exception of Italy, which just came in just a slight weaker number. Those tend to move in unison, said Matt Simpson. So if we get a positive readout from China, it's quite likely we'll get positive readouts from Europe later today, in which case you're looking at a long euro, he said. You only have to come back a tick or two higher above expectations. You've got upside, arguably, for the euro. Well, maybe arguably so, but it's not happening. Excuse me. Yeah, cover a couple extra news stories just as we start the week out. Give us a bit of a flavor to start the week out. So the German 10-year bond yields at 1-week high on the new SPD leadership. The German 10-year government bond yields climbed to a 1-week high on Monday as the Social Democrats chose new leaders threatening the ruling German coalition. The leading leaders of the Social Democrats are demanding a shift in policies, and several senior conservatives on Sunday ruled out talks to renegotiate a governing agreement. Whatever actually happens from here, this news will likely get markets excited about an easier path for more German fiscal policy in the future. Benchmark German bond yields were higher across the board, with 10-year yields up 5 basis points. Adding to the upward pressure, government bond yields, upbeat China manufacturing surveys, fueled expectations that the world's second biggest economy may have turned a corner. Risky assets got help from the Cakeson Manufacturing Purchasing Managers Index, which rose to 51.8 from 51.7 the previous month. We had some fundamentally good data on China over the weekend that's raising hopes that we have seen the bottom of the economy for now, said Renee Albrecht. Rising German yields rippled over to broader European bond markets. Italian 10-year yields rose more than 5 basis points. However, with no signs of a breakthrough in trade talks between China and the U.S., analysts said further gains in bond yields may be capped. Beijing's top priority in phase one of any trade deal with the U.S. is the removal of existing tariffs on Chinese goods, China's Global Times reporter noted on Sunday. And lastly, we'll cover that, as I mentioned, we covered all the PMIs came in good, with the exception of Italy, which just came in a slight bit weaker. than the previous month. Italian manufacturing activity declined for the 14th month running in November at roughly the same rate as the month before, a survey showed on Monday, suggesting the economy will continue to struggle in the near term. The IS Purchasing Managers Index edged down to 47.6 from 47.7 in October, remaining clearly below the 50 mark that separates growth from contraction. IS Market said its sub-index for new orders at manufacturers declined to 46.7 from 47.1, but the sub-indexes for manufacturing output and employment both rose. The Eurozone's third largest economy has been broadly stagnant for the last 7 quarters, and economists expect growth to be only marginally above zero over the whole of this year. Gross domestic product rose 1/10 in the third quarter from the previous 3 months, as was up 3/10 on a year-on-year basis. Statistics Bureau ISTAT reported on Thursday. So with that, we're going to move into our analysis. Quick little overview of things. And let me pull up the bias chart. So it says the euro tested new lows for the last 2 weeks at 982, managing to close above 110. The pair needs a daily close above 1034 to stymie the bears in the short run. A daily close above 1083 will confirm a short-term bottom is in place. And I put key support is 1055, but I meant to put key resistance is, key support is 955 actually. So that wasn't resistance, it should be key support is 955. So for right now, we do need, if we can get a daily close, and we're looking at, like the old saying, you got to crawl before you can walk and walk before you can run. The pair needs a daily close above 1034. If we can get a daily close above 1034, that will, as I said, stymie the bears after we tested Friday's lows and turned around and reversed. But a daily close above 1083 would confirm a short-term bottom. That's it. We would confirm the bottom at that point if we get a daily close above 1083. So support at this juncture, I mean, we're still a bit weak here. I think we'll put the support at those lows that we hit on on Friday, which is going to be 982. You know, it's a bit, you know, the one gentleman was saying, okay, you're looking for a long euro, but we're not acting that way at this point. But we'll go and put the support at 982. I mean, you were thinking, you know, you got great, I mean, not great, but good manufacturing PMIs in the sense that they all responded better than the previous month, with the exception of Italy, although they are still below contractionary mode. But it still hasn't lifted the euro at this point. You know, considering how we did technically on Friday and to come back, you would have expected some follow through. We're simply not seeing it. Now, as I mentioned, they need a daily close above 1034 to stymie the bears. That will put the bears, you know, put them back in the den, at least temporarily. We would need a daily close above 1083, and then that would actually confirm a short-term bottom. But resistance will be 1052 for today, so no changes there. Let's go and move into the cable. So this is the cable continues to hover just below the key pivot of 2980 after defending 2842. A daily close above 2980 opens a challenge to 3170 for starters, with the immediate resistance being at 3050. Support is 2827 with a close below, setting the pair to 2742. So, we're right there. Let's kind of push this back in here. You can see we've done a lot of work here. We seem so close to getting above, and a daily close above 2980 is going to really ignite some stuff, but ignite some movement, I should say. But we haven't been able to go over the hill, over the hump, and then the polls did show that the lead that the conservatives had is quickly narrowing, which is a bit of a concern here. So that's kind of put the cable on the back foot. And considering we're not that far away from the 2980, I think the ability for it to pair back, at least from here, is, the percentage is a little bit higher. I'm not saying it's going to turn around and fall apart, but anybody that's bullish, then you're thinking, wow, I thought we were getting ready to go in and push out. Wait a minute, we have these polls. You know what, maybe I should just go in and at least take some of my long off, or I'm going to take my long off. So, and we haven't pulled back that much. So my thought is that we're open to a little bit of a dip in here, even if it's not too much. We're actually going to go with 2844. Actually, you know what? We did defend that 42, so we're going to go back to 2842. Back there, but we were talking about how to defend that. So it'll be 2842 if we do see that pullback. And resistance remains that pivot, 2980. 2980 on the pivot. And you can see how, you can look at other areas, but for right now, and maybe on a short-term basis in light of where these polls are right now, we could go with Friday's resistance, which is 2923. If you're scalping it or you want to get short. But the key thing is that, this is where the real resistance is, 2980. If we can get above that, especially on a daily close, this thing would really get moving. I guess, like I said, if you want to go in and short it, you can either put it above the highs or, like I said, put your stop right at 2980, because you know that's your risk at this point. Daily close above 2980, and we really get moving. 1 minute. Let's go moving to the Aussie. Now, since the Aussie closed at new recent lows last week, opening the challenge for 67.16 with initial support of 67.48. Resistance is 68.08, followed by 68.31. Well, we saw a bit of a rebound because of the Chinese Caixin survey. And Blake has mentioned several times it's odd that the Aussie dollar has simply not wanted to follow the SPOOs, which are at all-time highs. It's just basically been mired in mediocrity, if you even call it at best that. Because like I said, we moved at new recent lows on Friday. We have turned around and rebounded a bit here. So there's a little bit of a risk on, if you want to even call it that. But resistance will remain 68.08, so we'll put that in here. We had 68.16 from before. Yeah, let's go with 68.18. If things are going to turn around, they would have to get above there. I mean, on a very short-term basis, they may be able to push up a little bit higher, but let's go with 68.18. And then on the downside, I'll go to these most recent lows right here. We closed, which is right there. Call it 67. Oh, it's right here. Actually, the lows from Friday. Let's just call it 67.53. A tick off to the lows. We had 67.48 before. Yeah, tell you what, we'll stay with 67.48 just to give a little bit of room. But really, if we do have, if they're going to push it up a little bit higher, still, even with the cakes and survey, you would expect them to push even a little bit further. Why? I think it's just we're going to go and put the resistance at 68.18. This thing would need to prove itself. Now, if we do get a daily close above 68.18, it does allow for a further move. But for right now, let's see what they can do. But it's not that much of a great showing, considering how all the other markets have gone a bit risk on with that positive China cakes and survey. Let's go and move into the Kiwi. Now, with the Kiwi, we were already starting to move up a little bit higher. You can see we had right in here, we'll continue a different cry from what we'd seen against the Aussie, which has been mired in mediocrity at best, which has been actually made new lows on Friday, or new recent lows. And you can see here that the Kiwi had been pushing up against this key level, the 64.36. And it looks like obviously we're above it now. We've broken the real key resistance going forward is going to be the 64.93 key level right here. You can see that right there. Key major level there, 64.93. Obviously, things are moving along quite well on here. So that's going to be our, if they're going to push it hard, they certainly have the momentum. And anyone that was selling against this would be looking to have those stops at least on a daily close above the 64.36. So resistance is going to be 64.93. And support, we'll go with 63.96. We're tightening it up quite a bit, but if they're going to go on and start to move here and push those stops in, should be able to move that up higher. And with that, let's go and move into the dollar CAD. The dollar CAD has been repeatedly turned away from the intermediate resistance level of 33.36. The pair to test 32.36 with additional support at 32.05. A daily close above 33.36 will allow the pair to move to 34.12 with a pause at 33.82. So we've had some trouble getting past that 33.36. As I mentioned, turned away now. Like I said, turned away because we've made it up in here into the, this is right here. We've come into the 33.20s repeatedly, and 33 teens. We still haven't been able to get past it. We would need a daily close right now at this point above 33.04, but the real resistance remains 33.36. That's going to be, we can keep that as our resistance. The potential is that we can pair back. If you look at Friday's close, look at that. It's a nice little gravestone doji there. Support, if we do get that slide, then is going to go on and come in at 32.36, and that's what we'll be looking at if we do get that slide. So 32.36. And with that, we'll move on to the peso. So the dollar peso finished at its best level in 5 weeks. Resistance is 1962 with a daily close above that. Would open a challenge to 1985 with a first pause at 1973. We'll go on and pull this back in here for a little bit better perspective. Support comes in at 1935, followed by 1930. So we're looking at 1962 for our resistance, which we had that from Friday anyway. And support I mentioned is at 1935, but considering how we're holding up here on the peso, I think we need to move that a little bit closer. So support at this point would be support would actually be Friday's low, which is going to be right there. Let's go with 1942, which is what we had on Friday also for support. Reminds you, this is almost like the boy that cried wolf. At this point, I don't even know anybody I've seen this trade in the peso at this point. I guess they were down here, kept thinking it was going to take off, and they're disappointing. And then we move higher, then we turn around and come back down. That I don't think I've seen anybody that's trading the peso at this point. But with that, let's go and move into the Dalian. So the Dalian closed a week above the pivot, which is 927. We've talked about that relentlessly, suggesting a possible move to 1055. Initial resistance is 977. We haven't quite yet got there. We're not that far away. With support at 908. A daily close below the pivot would allow a slide back to 851. So we'll stick with the technicals. So potentially, we've talked about this before, up in here to 1055. But for right now, resistance is here, 977. And we talked about support at 908, but here's the key is for right now, they're going to try and defend that pivot. So we got to go, the pivot's going to have to be support, 927. If we were to slide back, then your first line of support would be 908. But for right now, you got to be looking at the pivot. Okay, we just had some UK data out. A slight bit weaker, but nothing of any, no real major movement. Let's go and get back in now. Let's go and move into the cash dollar index. So the dollar index finished the week with a near gravestone doji, allowing for doubt to come in. A pullback will find support at 97.79, followed by 97.45. Resistance remains 98.65, which would place the bulls in full control. So we did see the cash dollar index make a move up to 98.55. The key is that 98.65 daily close above that would put the bulls in full control with the first stop at 99.13. So resistance is going to continue to remain 98.65. Did see here that we do have Canadian manufacturing PMI out this morning. That's actually going to come in at, okay, at 8:30. Bear with me. So it's going to remain 98.65. And if we were to break low on the cash dollar index, we were looking for 97.79. Well, we've already made a pretty decent little stand here. We're still trying to hold above. So at least for today, bias chart support is going to be 98 even. We're looking for potentially, if they got past this 97.89, they may test some stops and push that a little bit lower. But at this point, after making a move up to 98.55, we'll be looking for the support to be a little bit higher, which would come in at 98 even, and which is what we had from last week. With that, we'll go and move into the cross rates. So we have seen this Kiwi yen make a nice little move here. Let's go and move into that. So the Kiwi yen is attempting to forge higher, but has not scaled resistance at 70.48. Well, guess what? This morning we scaled resistance at 70.48. Major resistance is 71.05, and you can see we're making a move there right now. So did get past the 70.48, but the key resistance is actually 71.05. So that's going to be our bias chart resistance for today. And that says, well, if we do get that daily close of 71.05, that would confirm a bottom is in place. And that's certainly going, if we were able to do that, then that really actually opens the door for a move, at least initially, potentially a move to 71.77 if we get that daily close of 71.05, with the potential to move to 72. First resistance level beyond 71.05 would be 71.45, but we got to get there before we start talking that way. So resistance will be 71.05 with support at 70.07. Actually, we can move that a little bit higher too. Support right now will be 70.28. here on the Kiwi yen. And with that, let's go and move on to the euro yen. So the euro yen finished at its best levels for the past week after retesting sub 120. Immediate resistance is going to be 20.89, which it looks like we made a little bit of a run right there. Let's see here. Yeah, they actually got to 20.92. But we're going to stick with that 20.89 for right now. You can see here, there's resistance coming across these touches. Let's just call it. You can see these touches come right across there. So it's 20.89. And if we are able to get a daily close above 20.89, that would make a move for 21.37. And potentially can get up to 22.64. But we got to get resistance comes in at 20.89 with key resistance at 21.37. Beyond that, support comes in at 19.71. Well, that's a ways off considering how we'll continue to respond a little bit higher. So support is actually going to come in at 20.32. 20.32 for support. Here in the euro yen. And with that, let's go move into euro odd. We continue to keep mixed bagging it here in the euro odd. After we dipped down here and we to these lows, we actually ultimately ended up moving the trend line here to support this level because we actually had a trend line a little bit higher. But after we took a dip and we reclaimed 60.85, we did move that, and we made that move higher. Obviously, some people that got short as we broke lower, we reclaimed that. They stopped them out, and then we've just been kind of sitting here for the last 2 weeks, doing a whole bunch of nothing, for the most part. So the euro yen finished at its best levels for the past week after retesting. Let's see, on to the euro odd. So the euro has spent the past week in a tight range, defending the lower 62s while finishing with a slight bid. A daily close above 63.41 will allow a move to 64.50. Support comes in at 62.31, with a daily close below 62.02, allowing for a test of 61.40. So we're right there just about. I think we probably have tested it already, which is support today, and it's going to remain the same, which is going to be 62.31. And resistance will be Friday's close, which looks like we'll run out of gas, which is going to be 62.92. And let's go and move into the Euro Kiwi. Well, you can see this breaking lower because the Kiwi's been strengthening, but look at that. And 71.31 was key. So it says the euro Kiwi took out stops below the support level 71 even, then closed respectively above 71.50. The pair remains bearish but is attempting to hold major levels 71.31. A daily close below 71.31 opens a challenge to 69.42. You can see that key level there, 69.42. So that's what we're going to be looking for now at this point. We're looking now for a move down here to 69.42. There is some support before there. Yeah, let's see here. So support is going to be coming in at 69.91. We're looking for a potential move to 69.42. So let's go with 69.91 for support. Resistance, well, we broke that 71.31. Resistance is actually going to be Friday's lows, which is 70.82. And looking at the Aussie yen, we're a little bit better here. Aussie is attempting to hold the major level of 74.02. You can see that clearly. The pair has no sense of direction for the time being. Resistance is 74.48 with support at 73.48, 73.45. So we're not too far away from that. We've almost got there, but it's still going to remain 74.48. Actually, I had 74.49 from Friday. And support from Friday was 73.42. We mentioned 73.45. And with that, let's go move on to the guppy. So the guppy closed at its best level on Friday. A daily close above 41.82 will set up a move to 43.36. Support is 39.73 with a daily close below that, allowing a move to 38.14. So we're still keeping a bid here. Considering how the yen's weakened, well, you would have thought we might have been able to push higher. But once again, remember the sterling pairs have been rather contained because of those weakening poll numbers showing the conservatives' lead narrowing. So resistance is going to be this key 41.82. You can see that right there. And that has kept the market in check so far this morning. And support is going to be right here. There you go, the close. 40.74. That'll be support. And let's go move into the sterling odd. This is a bit of a head scratcher in the sense that it looked like we could move higher. Then we would have started the week moving higher immediately. And that obviously we would pushed hard, but my thoughts being, I can see where the sterling pairs are going to be a little bit weaker in light of you know, the poll numbers came out weaker. We're seeing sterling pairs a little bit on the defensive, but the Aussie hasn't been going anywhere. You see what I'm saying? So I'm a bit surprised that we're dipping back and we're at least not, at the very least, adding on to those impressive gains from Friday. But that being said, so it says the sterling on closed above the major level of 90.58. Well, we're below 90.58. Allowing for a potential move to 94.05. Immediate resistance comes in at 91.65. Well, as I mentioned, right now we're below 90.58. I don't even get it why we're dipping back. I'm a bit surprised because, like I said, I could see if I saw real true Aussie strength, and we're not seeing that. So it's going to be interesting if they close below 90.58. That is really going to weigh. The resistance is actually going to be for today. We're going to put it for just to today's high, which is 90.93 is going to be the resistance. It's going to be interesting, you know, pretty good little dogfight here at 90.58. But we're going to try and give it a little bit of room. We'll go with 90.93 for resistance. With support coming in at we'll put support at 89.71. 89.71, and that's coming right here off of it, right there. Support can be at 89.71. Okay. And let's go and take a look here at the equities. Now we're seeing, once again, all-time highs here in equities. I'm seeing the spoof pair back just a bit. The futures actually made it all the way up to 31.58. And we're actually right now, we've come off almost 4 handles from that level of 31.58. But still, like I said, holding up even above Friday's highs, at least for now. Gold continues to remain weak down here at this 1455-ish area. Here, Feb goals at 1462. But once again, you can see here the bunds have really come under a little bit of pressure here. We covered that about a little bit of leadership change and concerns with the Christian Democratic Party, and so that's put the bunds under pressure. And you would have thought potentially that would have translated to some support here in the euro, but we haven't really seen any moves here in the euro. We are seeing crude after got really just absolutely clocked on Friday. Trying to come back a little bit here. There was some expiration, but boy, the wheels completely came off crude oil. Boy, something else. Let's go and move on now back here into the currencies. The euro dollar continues to just meander here. I just can't believe how it seems incapable of finding a bid, although we did defend on Friday. We hit those lows. We came back rather strongly, but once again, I would have expected us to add a little bit further. We haven't been able to do that. And dollar CAD still continuing to just languish here, although we do have data coming out at 9:30 Eastern for the dollar CAD. Obviously, the Dalian still remains rather strong here overall, but like I said, it's going to be interesting to find out what happens here, despite another all-time high with S&Ps. But still, we are above the pivot, but it's not like as if it's launching. So that's all we have for today. We'll see you in the chat room. I'll get the bias chart out. And thanks for joining us here on the European Crossover webinar.